And welcome everybody to the 20th episode of the #InvestThis podcast. I am your host, Scott Bauer, and today we have Michael Pouliot with us. He's out of Boulder, Colorado, investing in some apartments. He's kind of got a pretty interesting background, it looks like, and excited to have him on the show. So, Michael, thanks for being here. How you doing?
Hi, how you doing? I'm glad to be here, and thanks for having me.
Absolutely. Why don't you go ahead and give the listeners a little bit more about your background, kind of what you're focused on now, and we'll go from there.
Sure. So my background, I have a degree in finance, and I started my career in banking for a few years, kind of went through the analyst program, working in New York, did that for a few years. And as many people may know, it's a pretty hard, long days, long commutes, because I was living in New Jersey at the time. And from there, I transitioned to another position where I was working as a financial consultant, which is a job I currently have. And I value distressed and illiquid debt and equity securities for private equity funds and things like that. So a lot of transferable skills from all that kind of work experience to real estate. Started investing in real estate 2 years ago or so. Bought a 2-bed, 1-bath row home in Philadelphia, distressed for $47,000, and did a gut renovation and did the, I'm sure many of your listeners are familiar with the BRRRR method. So I bought it, renovated it, rented it out, and then refinanced it, and then repeated. And then the market's been very favorable, so the refinancing was really good, and I was able to kind of continue to roll those proceeds into more and more single family. I continue to execute on that strategy, but what I'm kind of focused on right now is I started to see that single family is a great asset, but it's one at a time. It's it can be a drag at times, and there's not a lot of cash flow to offset any major capex, things like that. So really takes a lot of scale within single family to generate the cash flow, which is always my goal. So started looking at multifamily, and that's what I'm sort of focused on now. And right now I've got a one project that I'm doing, and then I've got a few projects under contract, and I'm happy to talk about that as we go on here.
Definitely. So, I mean, that's pretty exciting. You kind of took the plunge from single family into multifamily. And I think that the background that you're working still at a finance job where you're basically looking at these deals all the time for other companies, right? Mm-hmm. So you're being exposed to that. And do you think that really helps you out in underwriting and understanding the properties and projects you have going on now?
Yeah, I think everyone comes to it with a different skill set, and I don't think it's necessary to have a finance background in order to be successful in real estate. But it certainly helped, especially as you mentioned, with the underwriting and the diligence process, to be familiar with a lot of that stuff from my kind of my corporate world. But there's a lot of things that you can develop from other jobs that you may have, and kind of transition or use those same skills in this real estate world.
So you had mentioned that do you have multiple single family houses that you've bought over the time? And when did you start doing that?
So I bought my first house on August 15th of 2016. So just a little bit less than 2 years ago. I'm not like, that happened to be the day before my birthday. So that's why I happen to remember that date.
Nice.
So I bought that property. And like I said, the market has been appreciating over the last few years, especially in Philly. I really like Philadelphia as a real estate market. So I've sort of continued to roll that, and I have 12 single-family homes in that market now under the same process. I find the BRRRR method to be a really great way to scale quickly and to do it with a little bit less capital than you otherwise would have to do if you're saving up for 20% down payment every single time and kind of going with that process. It could take you 10 years, 15 years before you can get the same level of scale that I was able to do in about 2 years. Are you financing those through hard money or private money or anything like that to take them down? Yeah, exactly. So I use hard money lenders to originally, buy the asset. They're distressed. There is no tenant in them when I'm buying them. So it's typically like through a wholesale deal or something like that. And we'll, finance it with hard money. We'll go ahead and do the renovation. We will put a tenant in there, and then once it's stable, we'll go and take out that hard money lender with bank debt of some kind, of maybe a local credit union or maybe one of those national rental companies, like without plugging any specifically.
Yeah, definitely. Yeah, and I mean the BRRRR method. I'm sure everybody who's listening to this knows what that is or where that comes from, but that's bigger pockets all day long. And so it sounds like you probably hang out on bigger pockets quite a bit.
Yeah. No, I definitely have and do certainly listen and hang out on the community over there. So definitely a really great resource for people starting out or even, experienced investors.
It's huge, and it's something I wish I spent more time on it. It's not because I don't want to, it's just because it's it takes time, right? So
yeah,
that's huge. But so, you kind of mentioned that you saw that with single family, although it is a very good asset, right? It has its pros and cons, just like everything else. But it could take a long time to really build up some scale with it. It could take a while to really get a lot of cash flow going on. And for each individual house, a lot of times they don't have a whole lot of cash flow. So let's say you have a major repair that happens or something like that. It could take you out for the whole year, your whole profit for the entire year, right? So
absolutely. Yeah. It's happened to me already just in the short time that I've been doing this.
So you learn quickly. Very nice. So when you made the decision to go into multis, what was the first deal that you did? How big was that? Have you done it already?
So I mean, I've done a couple of duplexes in Philly, but when I talk about the 5+ arena, that multifamily, when I moved out to Boulder, I was looking for an opportunity that's sort of when I kind of started thinking about multifamily more and this whole, scale thing. And, I was looking for a market that I could easily travel to, and Denver was super hot. It was super hot, and I was looking for opportunities to buy things at cap rates that I couldn't find readily in the Denver market. Not that they're not out there; people are doing very good stuff in Denver. But
what cap rate are you talking about? What cap rate were you looking for?
I mean, it wasn't necessarily cap rate 100%. It was more just looking for that significant value add. I mean, I don't necessarily need the income to be there day one, but I need to have the potential to get to the income that I want in order to refinance. So it's really taking the Burr method that I used in single family and applying it to multifamily. So with Burr, the benefit is that, by doing the renovation, you're essentially, flipping the property and creating that value that normally you'd liquidate the asset and take that cash. In a Burr, you don't take the cash out and you leave it in there, and that becomes your equity, basically down payment for the loan. So you're not coming out of pocket when you refinance. So I was looking for basically that same process to be possible in multifamily, and so I started looking around the country and look for places I could fly to same day, get back same day without a huge time change. And Chicago was a market that, it's the third largest, city in the country, second largest tourist destination. I just, I really like Chicago. So figured if I'm going to spend time somewhere, I might as well like it. So started looking at property, speaking with brokers in the area, trying to get a bit of a handle on that local market. Obviously, there's a lot of different markets within Chicago. So ultimately, I ended up buying a 36-unit apartment complex, which was about 40% economic occupancy at the time when I bought it. So a significantly distressed asset, similar to what I was doing in Philly. And since then, I've been renovating that project and getting it totally, a lot of gut jobs inside of units, new electrical, new plumbing, newer roof, just basically I needed everything. And lead remediation, asbestos remediation. I mean, there was a lot going on there. And we're about 80 to 85% completed on that project and 3 or 4 months away from being able to, refinance my money out.
When did you buy that deal?
November of last year. So about 5 months ago.
And that's 36 units in November.
Yeah, that's correct.
And are you syndicating that then? Do you have another hard money lender on the bigger deal or what?
Yeah, so obviously I couldn't use the same hard money lender that I was using in Philly. So I had to build a new relationship with a new lender that would get comfortable with the fact that I was not a local investor. I'd never done multifamily before. What other things were working against me?
You're not in that.
It was a 40% economic occupancy. There was no cash flow. I mean, it was just like, all the wrong things. But was able to, develop a relationship with a local team. They were kind of aligned with me on growing my kind of business over the long term. So they sort of saw that potential over time, and got hard money financing for probably 80 to 85% of the total cost of the project. I was able to bring in one other investor in like a preferred equity tranche, so they basically get the first dollar after the debt. and they get a nice little coupon while they wait for their capital back. And then I came in with that last piece of equity, as well as the operating capital necessary to execute on the rehab.
Now, did you take like an acquisitions fee to put that deal together to find it, or not really on this type of deal, or it wasn't big enough?
At that point, since it was my own money, it would really be an acquisition fee out of my own pocket into my own pocket. So it didn't really, necessarily, work for this deal. But, at the end of the day, I have 100% equity ownership of the property. So once I refinance out my lender and my preferred equity partner, I'll, have 100% ownership. So, that was worth it.
No, yeah. I mean, and that's huge. I think up to this point, I mean, my entire business I've built myself. I've raised all the money, so to speak, myself. And so it's 100% mine. And,
Yep.
when you get into a syndication type model, now all of a sudden you're bringing other investors in that you're basically indebted to until, you get them out of it. Right. And so they're taking a piece of the pie, and you have the opportunity, I guess, to go bigger faster, but you're not also you don't have as much of ownership. Right. So maybe what you're doing is probably, or could be the right call. Right. So you get a 36 unit, and then you had mentioned you have a couple other ones under contract as well.
I do. Yes. So, and those are via syndication. So I have the three property. So the three property. Well, that's not entirely true. So I have a 61 unit that's going to be going through syndication, and we are through the diligence period, submitting the loan. We're probably 45 to 60 days from closing on that one, and we have raised the funds necessary to close on that from an equity side perspective. Then we have two other properties, a 54 unit and a 28 unit that I found a single investor that we're going to be JVing together on. So in that situation, there's no acquisition fee. I basically got a piece of the deal for, putting the deal together, finding the asset, underwriting it, helping with asset management. And in that case, it's an investor that, is looking for a passive opportunity, but ultimately will want to be an active investor. So the idea is that I can help that person kind of get up to speed on the whole process, and then ultimately they can go out and do their own deals. And then the 61 unit, like I said, was syndication. So we're raising a limited partner capital for the most of the equity. I'll be putting in some money as well, and then we'll get the rest from the bank.
Cool. So pretty exciting stuff, really. I mean, you got to be pumped.
Yeah.
So,
it's been awesome, and this has all really come together in the last few. I mean, I guess it hasn't been the last few weeks, but the last few months, right? I mean, if I bought that property in November, a 36 unit, and I've been, I put these other projects under contract sort of like in the last, 2 to 3 months. So it's been really exciting, and I've had a great time doing it.
Well, let's back up a little bit, because I think a lot of listeners are going to wonder, how you're buying outside of your market and how you built those relationships, not only finding the brokers, but also finding the rehab team and the property management company, and making sure that those are all the people you wanted to have. So let's walk through that a little bit. Okay.
Yeah. So starting with the properties, I mean, that's where I started. So I started with broker. I found a broker that, I basically looked at the Chicago market. I looked at, LoopNet, found the brokers, the same story as a lot of people, found the brokers that had the listings in the area. Then I talked to those brokers and figured out, what are the brokerage houses that are, specific to the areas I was looking at. And then started building relationships with 3 or 4 different brokers. I don't think it's necessary if you're going to be in a relatively, small market, not small in, population, but small in maybe size, like, radius. You don't have to have relationships with 15 different people. I mean, just try to develop a few relationships with people that are doing the most volume, because ultimately a lot of the deals go to just a few different people. That's just how it kind of ends up going. So I try to develop relationships with those people, and I, came up with an elevator pitch. In 60 second, I'm looking for, 25 to 50 unit Class C apartments with a value add component. I want to be able to get my money back within 2 to 3 years, or at least 80% of my money back in 2 to 3 years. I don't want to be in a war zone. I want the bones of the property to be relatively in good shape. I don't want to have to, replace, a lot of CapEx that isn't going to show up in the rents. So I'm primarily looking for that interior renovation type value add. And, kind of just keep in touch with those brokers, tell them the same story over and over again. Let them know that, you're not sort of dabbling and looking for one property, but I also told them, hey, I'm looking to buy 300 to 500 doors in this area over the next 2 to 5 years. and, I'd love you to be part of that, so you sort of try to get them invested. And then, that put me on a list of people that were interested in property. And I don't know if I got the first call, but I think as I do more deals, I think I'm getting more access to more deals. So that's the broker. And then property manager, that was something that as I started working through the first deal, the 36 unit, as I went through the transaction, I would ask every single person I was speaking with, who do you recommend for property management in this area? And it turned out that, every single person would mention the same company. And, I would ask for like a list of 2 or 3 people, and they were always the top of the list or the only person they even mentioned. So, getting that validation like 8, 9, 10 times in like a 6-week period from contract to closing, I was like, these are the people for me. Went out to Chicago, obviously, a few times during this process, during the first acquisition. Met with the principal at that firm, really liked his strategy, liked, how they started their firm and how they grew to this level that they're at now. And, so that was all based on referral. And then what was the third? Was there a third? So properties and brokers and
yeah, I mean, just how you got started. You're out of state. You're not in state, which
right.
You kind of went through that. I mean, you're just building relationships and looking for referrals.
Yeah, exactly. And contractors. So contractors are always the thing that sort of gums up the works, right? You have a contractor that never calls you back, or is always late or always over budget or whatever. I went into this project, a 36 unit with a pretty healthy budget, thought I was pretty secure in the contractor I picked. And then 2 weeks before the project started, he emails me and says, "Oh, sorry, I just got a $2.5 million job and I no longer have capacity to do this." And I was like, whoa. And that was a pretty big deal because I had already submitted my scope of work to my lender. They'd already approved it. They went to committee. They weren't going to change the budget. Like, I wasn't going to get a new loan because the contractor backed out. So I had to replace that contractor with somebody else. Again, this is based on referral. So I, went around trying to get a referral, and then I started talking to that referral's, contacts, and, tried to make sure that there was, synergy there, and then met with them, obviously, saw some of their work, et cetera. And I was like, listen, this is my budget. Can you do it at this budget? And, based on the scope and everything. And, he was able to thankfully be able to do it at that budget. And again, I told him, this is not the only project you're going to get. There's going to be more down the line. You do a good job here, and we're going to, have a lot of work down the line over the next few years. So I think that really helps as well. Sort of try to tell everyone you're working with that you're not just kind of like a fly-by-night person. You're someone who wants to build a business and, grow together.
Definitely. And I think that's huge, kind of going down the line. What about when it comes to showing the financials? So making sure, because, here in Phoenix, or really probably anywhere, Chicago is a massive area as well. But if you call a broker up and say, "Hey, I want to buy a property," they're like, "Sweet, don't care, join the rest of the group." But how do you get the brokers to believe that you're actually going to close, that you're actually going to be a player? I mean, did you start writing offers, LOIs?
Yes.
Did the first one you write get accepted, and then?
Right. Well, I mean, in the case of the 36 unit, I had been developing that relationship with the broker for a while before I even moved out to Boulder. So we had moved to Boulder in August, and I didn't buy that asset until November. So I've been developing that relationship and asking him about deals and stuff for 3 to 6 months. And that deal fell out of contract, and then he called me. And then I was able to close it quickly with hard money. Where the prior group was unable to close because of the physical and economic occupancy issues in the property. So, and then after it was, yeah, oh yeah. I mean, it was a building. It should have been making, $20,000 to $30,000 a month in revenue, and it was making $6,000. So, pretty 6 or 7, I don't know, give or take, So, really matter, right. Yeah. So after I closed that property and started, getting close to the end of the renovation, I think brokers, because I just tell brokers, "Hey, I have an asset in the market 7 blocks to the east, and I'm looking to build my portfolio to X, and then I think people start taking me seriously. So there is a hurdle in getting that first property. And it was somewhat of a unique situation that I had, but there are unique situations happening every day. So because it's unique doesn't mean that it's uncommon.
Yeah.
A
lot of truth there For sure. And I think, I mean, it sounds like, and this is the standard, right? Your first deal is always the hardest. And then once you get the first deal done, then it's okay. Now you can start snowballing, right?
Sure.
And you're going to learn throughout the entire time, and problems are going to come up, and your contractor crews are going to magically get a $2.5 million job to the side, right? But
yeah,
that type of stuff happens often.
Sure.
Would you say that now? I mean, you got the first one really out of the way almost, but what's next? I mean, what do you see the next 5 years look like for you?
The next 5 years. So yeah, still working at my job. So that's still going strong. And, over the next 5 years, I anticipate growing my, unit count in Chicago to, 300 to 500 doors, minimum. That's my intention. That'll be a combination of, properties I own wholly, without syndication, and then other properties that I buy through syndication. Primarily looking at assets in the 20 to 80 unit range, like I mentioned earlier, 725 to 75, either way. So, kind of right below institutional like level or grade, but still kind of too big for an individual investor to write a check on. So it's sort of like, in my opinion, kind of a sweet spot.
Yeah.
So continue to execute on that. I also flip properties, single family homes. So my goal there is actually going to be, looking to launch a fix and flip fund towards the end of this year. So I'll be doing that alongside of also, buying multifamily. And then I also have my single family portfolio in Philadelphia that I'm going to continue to cultivate, either, at least finish the projects I currently have and then potentially add more, over time, maybe 3 or 4 or 5 a year. So that's the goal.
Yeah. That's a good goal for sure. It's just keeping yourself moving forward and keeping, I guess, everything, as you buy more doors. Do you think you'll make the switch from single family to fully multifamily all the time, or?
I sort of struggle with this because before I started multifamily, my intention was that I would, prove the model of the BRRRR strategy, and do it, 10, 20, 30 times. And then I would scale up that. And instead of doing 1 or 2 or 3 at a time, I would basically, do 20 or 30 a month. And then every month I would, kind of tranche that out into a refinance. And so like each year I would be doing, 200 or 300 of these BRRRR methods, but it would be kind of a systematized process. And then I left the area and I just don't have the teams and the systems in place in that area to really execute on that. So that sort of went by the wayside. And then, ultimately it just is much less of an administrative hassle to do it in a multifamily where you have one building, one property manager, one contractor versus, 30 single family homes where you have 30 separate jobs, and the contractor's bouncing from project to project. And it's possible they may not even see a project for 3 or 4 days because they're, they got to go to other projects. So ultimately I decided in that case, multifamily ended up making, more sense for the hold. And then so far as flipping, I don't intend to flip, as people say, flipping is a job, but in a lot of ways you can systematize flipping. And it's not like the TV shows. You don't have to, it doesn't take, full time 6 months to do one flip. You really can create a system and create procedures in order to eliminate, kind of the wasted time, where you can delegate a lot of the tasks to other people so that you can really free yourself up to do a large scale operation. So I plan to continue to do that. Obviously, as I said, I'm going to launch a fund and look to flip, 150 to 200 properties next year.
Which is a lot of properties. It's a lot, your systems better be good for sure.
Absolutely. Yeah.
But, I think that really from a time standpoint, segues us really nice into kind of the lightning round of this.
Sure.
You good with that? You ready to go?
Absolutely. Let's do it.
Okay, cool, man. So what is your hashtag INVESTTHIS tip to keep our listeners moving forward? If you could say one.
So my tip would be, I'm a big believer in mindset. So, really believe in what you're doing. Take consistent action. The more action you can take, the better. You're going to have setbacks. You're going to have contractors that blow you off. You're going to have budgets that go over. You're going to have, market issues that you don't anticipate, vacancy you didn't anticipate, et cetera. But those are only going to end up being learning experiences for you, and you may not, and they're going to ultimately help you. It may not appear that way at the time, and you may not realize it for weeks, months, or even years until you sort of say, oh, okay, well, I've actually used that challenge that I ran into 2 years ago. I was able to avoid something now because of that, or I realized it's actually not that big of a deal having an eviction. Like it's just a process and you just have to go through it. So I would say just like stay the course. Real estate is a long game, and just take consistent action, and you really can do wonderful things.
Yeah, I mean, that's huge. I'm all about that too. Mindset is massive. I always go off of never give up. So, right along the same ride. So
exactly.
Thank you for that. I appreciate that.
Sure.
Do you have a favorite book that has changed your life, and kind of what has that impact been for you?
Yeah. So I guess it's sort of in the same vein. Think and Grow Rich is a book I really, really like.
That's my favorite book as well. It's fun.
Oh, okay. I've read it a few times and I've listened to it a bunch of times. I find both mediums are really great. What it's helped me is, again, the value of mindset and, just saying things in your head, just saying things out loud and being comfortable with that and putting it out in the universe. And just, it's really amazing what happens when you do that. So that's what I would say. Think and Go Rich, and it's been a huge impact.
Man, that's awesome. We think a lot alike, so that's super cool. Because it's you put it in the universe, you let the universe know what's going on, you have positive mindset on a daily basis, and it just makes life that great, right? It makes things happen like what you're doing right now. So kudos to you. Have you been mentored, or do you have any major mentors that's giving you some really good advice? That has really changed your life?
Probably should have prepared an answer. So I guess I don't have any necessarily, huge, real life kind of mentors, but I'm a big listener of podcasts, and I really like Rod Khleif's podcasts, and I think it's, Lifetime Cash Flow, something like that is the name of it. And just listening to not only just his interviews, but he does a weekly mindset clip. And I think a lot of the things that he says, he's kind of a Tony Robbins guy. And a lot of the things he says really jive with what I'm thinking, and just the inspiration week over week. And, there are challenges that come up in real estate, as you know, and being able to kind of go to those podcasts and realize that, everyone's going through the same thing. Everyone has setbacks, and you just sort of have to plow forward and continue on. So yeah, definitely. I would say him, even though we haven't met in person.
Yeah. And that's an important point to kind of get out there, is that it doesn't have to be somebody that's necessarily, you've met one-on-one. You can learn a lot from people that have, put books together or podcasts or, even courses, even if you never met them,
Yeah.
So that's huge. Thank you for sharing that. What about, how do you get back, man?
Yeah. So, I like to, have conversations like this, not necessarily on a podcast, but, just share experiences and stories in real estate investing, because I don't know necessarily what your listeners' goals are, but for me, real estate investing is about freedom. It's about providing you and your family, your loved ones, the opportunity to have freedom of time and opportunity. So for me, real estate is an avenue to reach that, kind of not necessarily the beach 24/7, but to have the freedom of doing what I want when I want, whether or not that means working that day or not working that day, vacationing, or taking off at noon and just, spending the rest of the day with my son. So for me, that's what it's all about. And so I, want to give back by providing, any experience or, advice I can to people who are just starting out, or even, more experienced investors. And then, we also, provide monetary contributions to local charities, Red Cross, not local, but Red Cross, St. Jude's, things like that. Definitely.
And you know what, that's really good. There's a lot of people out there that want to get into what we're doing, that want to get into real estate investment. And it's always good to have somebody like yourself that they can go to ask questions or whatever. And that is extremely valuable. And once again, that leads us into the next question, which is, how can they get in touch with you?
Yeah, and I welcome anyone who's interested in learning more about me, or just if they have a situation that they want to run by anyone and they don't have anyone necessarily in their immediate network and they want to give me a call or send me an email, I would absolutely welcome that, and I will do my best to return those emails and phone calls within a day. Also for anyone who's looking to part with me on multifamily or fix and flip, I'm open to that as well. So my cell phone number is 201-341-3173. You may get me on that. If you don't get me on that, you can try my email address. It's just M and then my last name, Pouliot, P like in Peter, Ouliot, 816@gmail.com. And those are the best ways to get a hold of me. And I hope to help anyone out that I can.
Yeah, man. And hey, thank you for sharing that. I think you'll probably get some calls or something because you know what? Sure. I mean, it's huge. Mm-hmm. That's massive. So we'll make sure to add that into the show notes. And, I really appreciate you going through your cycle so far. I mean, going from single family into the multifamily side, into the, syndication side. And you know what? I really like that you touched on the mindset, because without the mindset, you really have nothing. This podcast is all about how to give people information to be able to invest in their business and life. And I think that's super, super important. You gotta have the mindset, or else you're not going to get where you want to go.
Absolutely. Yeah, I agree. And, best of luck to you and to your listeners. And let's maybe touch base again sometime soon and see where we both are.
Well, hey, and maybe we'll do a deal together. How about that?
Absolutely. Sounds good to me.
All right, man. Hey, I appreciate you being here today, and we'll talk to you soon.
Talk to you soon. Bye-bye.
Talk to you. Bye.